All right, good morning, everyone. Sorry for the late start. We some technical difficulties getting running this morning. All right, let's get into it. All right, U.S. markets had a huge session on Friday. Most all sectors kind of up across the board. Big move out of the Dow, S&P, and the Nasdaq. Really kind of major reversal from the previous day's action. And what made it so interesting is that the day before, we sold off on what was good data, or actually a couple of good events. We had the European Central Bank that came in and cut, and then we also had the GDP number. So we sold off on this good data. Obviously, people kind of worried about tapering fears, and then Friday we get the brilliant non-farm payroll number. And then all of a sudden, for some reason that great data was a reason to rally. So really kind of confusing action on the last few sessions. What makes it really interesting as well is that we didn't really see any follow through out of Asia. Kind of very little follow through this morning. I mean, look at the FTSE. The FTSE looking at up 29 points. It's just, we're only up 200. It's there's not a lot of follow through on the up here. So it's kind of the market doesn't really seem to be buying into it too much. So. I think the unemployment rate, as you can see there on the screen, looks like it was maybe ticked up on the back of a government shutdown, and we thought that if anything, that the non-farm payroll number was going to be light due to that, and that came out with a big beat. So it was a kind of a surprise in the opposite direction. So, but you can see there most of that's all priced into your gold price and even some of the currencies, because we just didn't get that same sort of move that we had already had from the day before. So maybe that's kind of what it is, and it seems to be all priced in from there. Asia was really mixed. I mean, we had Australia that was down on the day. Hong Kong and Shanghai were barely up, and then the only thing that was up reasonably was Japan, kind of on the back of a little bit of weakening in the yen, but very lackluster day out of China. China's got that big, their big meeting where they typically make reforms out of. That's going on right now. The plenum, there it is. The plenum, which is a major meeting that's going to be going on in the next few days, and I think that's probably you're going to see muted action out of China and just the Asian region going forward, because they put some property curbs or some things of that to that extent into place. You could get some big moves in the exchange there. All right, we had a few things out this morning. We had Vodacom, Telkom, and Able. Vodacom's headlines earning per share look a touch light on the HEPS. Looks better on the revenue number, which I think is maybe one of the things that we're going to kind of see going forward is the bit of margin compression with regards to the overall business and just that sector in general. Divi per share looks like a touch light, expected at $4, came in at $3.95. ARPU, they mentioned, was down 3.2%, and prepaid ARPU was actually up 1.4%. So I think a little bit soft potentially on the trading statement there. We had Telkom also is out this morning. Kind of a confusing trading statement. Headline earnings per share guidance this morning 622 to 628, higher due to adoption of IAS rules on employee benefits and property, plant, and equipment. So obviously playing around with the accounting there a little bit. And then earnings per share, they're saying 113 to 133 higher, excluding the impact on non-cash curtailment. So I think it's difficult to compare numbers there, because it looks like they're kind of making some accounting adjustments on the back of these IAS rules. And Able this morning, we had headline earnings per share. To ignore the comparison there, obviously those are old numbers out of Bloomberg consensus numbers that haven't been revised lower recently enough. So I'm not 100% sure what the expectations are. Now, obviously I think people are going to be focused on the rights issue, and the fact that the one thing that I think is interesting is that they've got no offers yet for the sale of Ellerines, which I think is probably a bit negative, and then good response to the rights offer, which obviously a bit is positive. So, and then we got Rimgrow, which is X, out this morning for R2.01. All right. The market data, we had some CPI numbers out of China, a bit soft, which is actually probably good going into this meeting. Industrial production was better than expected, and then we had retail sales, which were a hair light. Japanese current account balance, which is higher than expected. Australian home loans, which were also higher than expected, and then we've got industrial production out of Italy later. All right, let's jump into the maps. All right. First thing I'm going to have a look at this morning is actually the S&P. What in the heck is going on here? S&P. There we go. All right. I'm going to have a look at it on a 30-minute chart. Well, the reason why I want to show this is simply because if you can see here, we even with Friday's session, we failed to take out the highs. I can't draw a line. We failed to take out the highs from the session 2 days ago, or I guess 3 days ago now, which is really important. You know, we talked about making that key reversal on the index here. And breaking down from that key reversal pattern. The fact that we haven't been able to make new highs on Friday, I think is important. It still kind of gives us, technically, keeps us in that reversal pattern, and potentially can lead us back to lower levels again. Like I said, very important that it didn't take out those highs technically. Otherwise, you would have just totally been able to rule out that key reversal. All right, the next one we're going to have a look at here is FirstRand. We're going to look at it on a year. What I like to just show here, I'm going to actually cut out that little portion of the chart there. It's kind of like this little blip up here, because what I think is really the level is, call it 33. It's really probably more 33.10, which you can see right there. We had a touch. We had 3 or 4 lows in a row back in September there. We came back and tested it early October. Nice hold of that support, and that's where we broke out from. So that nice consolidation as we broke out, we put in that consolidation, moved higher, came back, tested it again, and then that's really where we made the breakout from. So 33 to 33.10, somewhere in that region, is really good support, I think, in FirstRand. If we drop these levels, I'm not really sure where we're going to end up pulling back to. Maybe closer to the 200-day, but it's definitely some nice support here in FirstRand. If you're bullish on this one, good little place to have a nibble probably. Nedbank, same sort of thing. We've finally had a decent sell-off here. We're talking about buying on support here because these charts are still looking very bullish, and I think it's got to be the play at the moment, at least for these kind of stocks. And you can see there, really right around 208, we kind of actually wicked down. We got very close to it on intraday on Friday, managed to close above 210. But you can see there, I think we're going to have to come down and test this 208 level a little bit more firmly before we'll be able to push higher in Nedbank. But I mean, you got to put it into perspective. We really only pulled off about 4.5% or so off the highs in Nedbank, so still a very, very benign pullback, but I think definitely some support here around 208. If we drop that, then we'll probably be looking for levels down around where we broke out, which are closer to 200 Rand. All right, Sasol. Also have a look at the Sasol on the 30-day. This one is just a little bit shaky in terms of being able to call this a head and shoulder, but it's kind of because the head's just not very much higher than the shoulders. But you can see there, still is the basic principles intact. I think it's interesting to watch just to see if we can kind of drop below supports here. We came down and tested it on Friday, managed to push higher into the close. That level I would really be looking for kind of a drop below 503 on a closing basis. Might be able to take us a little bit lower, not hectically lower, but maybe down to around, I don't know, high 480s or something like that if we drop down out of that pattern on the little short-term head and shoulder. All right, Netcare had great earnings on Friday. You can see there we made a nice little breakout there on Friday, and really kind of going to pop up here to test all-time highs potentially today, hopefully, which would be at what was previous highs here around 25.5. I'd really like to see the breakout happen a little bit higher, which is up closer to 25.70. I think we've been in this sort of this upper sideways consolidation for the last, I don't know, 6 or 7 months, and if we can break out to the top side of that, I would be really bullish for Netcare. And the last one I want to have a look at is Barlow's. We didn't really talk about it after earnings last week, but or I think maybe we did talk about it one day. We really ended up failing here to break out on a closing basis, and what's really shaping up to be a nice pattern. It could be a nice breakout to the upside, maybe a longer term, I don't know, cup and handle or something, and I think a significantly higher target if we can close above 99 Rand. So let's watch that one closely. I mean, I think buying this thing on pullbacks after those really good numbers, probably a nice opportunity. And above 99, I really think you could have a nice breakout play with significantly higher targets in Barlow. That's it for today, guys. Thanks a lot.